I think that bearish trend continuing into today's session, the NSE losing 35 points, coming in at 4,031. Equities really have been underperforming in Kenya in general. When are we going to see a lift up, do you think?
I think it's going to take some time. We've lost almost about 9% year to date. And the index has been just playing around 4,000, 3,900, thereabout. And I think it's going to continue for the next, the whole of this quarter until the end of the month. We should expect a bit of some volatility and probably some stability coming around August, September. But the losing trend may just continue.
The shilling is also on a losing streak. It's nearer the 90 shilling to the dollar mark, and some experts actually believe it's going to breach that level this week. Despite all the attempts by the CBK to mop up excess liquidity in the market, it's not working. What do you make of the currency?
I think there's been a huge demand from the importers, given that everyone wants to stock a bit of dollars before the price goes up. And I think this has filtered in through the market. And we saw today we hit 89.35, and we thought that was the highest, went to 89.45, 89.5. And I think there's a bit of a feeling that with the importers that they need to probably lock in a little bit more of the dollars before it hits the psychological level of 90. So you're right. I mean, in the next couple of days, you should see going lower to maybe 90. And I think it's been remarkable, sustainable for the last couple of weeks, like say a month. And I think it's likely to continue until we hit the 90 shillings.
The twin variables, Fred, of the shilling above 89 shillings to the dollar, and the fact that inflation is nearer the 13% mark at 12.95%. How's that impacting on government securities?
It's quite impacting negatively, actually. In fact, we've seen since 2003, the interest rates have really moved up. The 91 days doing just below 9%, as well as the 182. And I think these rates were just there in the year 2000. And I think what has happened is every subsequent auction, the investors are looking to get a better rate than the previous one. And you've seen until one time we used to have less subscription. But I think when the rates went up, now you're talking about 9.9 and 10.2 for the 1 year paper. A little bit of interest has come through. So clearly going forward, you're going to see probably more investors coming through, huge and healthy bids chasing the few government securities on the short end.
Let's talk about that, because apparently that's where we're seeing a lot of appetite for the shorter tenure bonds, 3 to 6 month papers. They're not sure what's going to happen to the interest rate cycle going forward, as you've suggested, but the government's very keen to have some of its debt bought up, purely because they're nearing the end of the fiscal year.
Yeah, precisely. In fact, as of last week, we had the borrowing program is 125 billion for the year 2010-2011. We had a balance of a deficit of about 36 billion. So the TVs that came last week were able to give us 17 billion. So that's substantially reduced. We are likely to see the interest rates probably going further up by just about 50 to 100 basis points until the end of the fiscal year. I'm not so sure what direction you're going to take after when July comes, though what I'm sure is the market has already changed. There's an interest rate panic. And I think no one is going to go at lower rates than what they went previously. I think the most important thing is for the government to be able to manage between the money market, where a lot of interest is coming for the short end, because everything above 1 year right now is underwater. Revaluation losses for the year June, for the half year to the 30th of June are going to be very, very massive. Maybe you're going to see most of the gains that banks did the whole of the 2 quarters may be eroded by the book losses from that shift of 400 basis points on the yield curve. Yeah.
Absolutely. I mean, a lot of banks have seen that they're not really earning a lot from their investments in government securities. Let's talk about the counters that are active. Williamson's tea gaining as much as 10% in today's session. Why is that?
Obviously, you know, the tea prices have really done very well, and the demand from the Far East for the Kenyan tea here has been quite interesting, quite high. And there's been a bit of a short of supply in the secondary market as well. So you realize short quantities of demand of 100,000, 200,000 cannot be filled up. And I think this has been very consistent. You're going to see the price sustaining that level maybe for the next 2, 3, 4 weeks until supply comes back. But I think not only on tea, but I think specific counters, even including Uchumi, for example, there's not been so much supply in the market. So I think that has really caused a bit of interest coming from the buy side, and most of the pension scheme, the fund managers are trying to lock in before the end of the second quarter is over.
I mean, we do know that with the market a bit subdued, it's really been the banks and some of the commercial stocks that have been carrying the market. But today we're seeing particular interest in the insurers, CFC Insurance, Pan-African Insurance. Now, what makes these ones different? Because really, some of the blue chip banks, although safer, their PEs are really quite high.
Yeah, precisely. I think the P's are quite double digit, and you may see that if you look at Pan-Africa, for example, or Jubilee, for that matter, or even ICDC, these are financial stocks, but not banks. And I think that's where the value is. I think for the last 6 months, you've seen a lot of activity coming from the banking sector, and you've seen prices move by 30 to 35% year to date on the banking side. That has not been the same case for some of these other non-banking stocks, as well as on the agricultural and in the industrials. So I think what you're seeing is just leveling, and the market is trying to find proper value, true value, and a bit of leveling for the stock prices. And probably going forward, with the P ratios of 14, 15 going upwards there, you're seeing investors are trying to a little bit lighten on some of these banking stocks, and probably moving forward to the other side of the market.